I've always known that when silver hits triple digits and gold goes to 5, 6, 7,000, it's going to go, it's not going to be fun. That I'm in a war zone. The country is basically shut down. And I knew that people were struggling before. And I kept telling them, take whatever you have and get some gold and silver with whatever you have left over. And they're like, I don't have anything left over. What do I do? And I'm like, if you have nothing left over, I can't really help you. Since silver moved from 20 to 120 and now it seems to be settling at around 80 or 90 or somewhere in there, it's still bouncing around. But where do you think we're going? Is it just going to keep going higher until the dollar falls, and then what?
They may have miscalculated, and we could get in a situation where things grind down to where the system just does fail. A bank closures, uncertainty in the market, and what do we do at that point? But we'll have some system tied to gold, tied to silver, bartering silver at some level, that type of thing.
You freeze everything, and then the banks collapse. Because the only thing that keeps the banks alive is the inflationary process. All bankers have always wanted to take over the world. That's nothing new. The dollar isn't born out of nothing. It's born out of silver. And then it switched to gold. We have to go back to that. And I've always known that when silver hits triple digits and silver and gold goes to 5, 6, 7,000, it's going to go, it's not going to be fun. I'm not having so much fun. And I know it's just going to get worse. And are you seeing something similar in your surroundings?
Well, I'm old enough to have gone through the 1980 blow off, and I was in it, and I was a very, much younger man. And, I mean, the people that made a lot of, fiat and the gold run and silver run, it was happy times. 1980, I mean, you could buy your boat or buy the sports car or upgrade your house, and things, because things were very calm. And the in my generation, particularly the boomers, I mean, everyone's, in my view, pretty greedy, but nonetheless, that's what was. But this time it's a whole different scenario. I mean, first of all, you really don't want to broadcast your wealth if you have, physical gold and silver. Then on the other hand, being big-hearted and humanitarian based and, gone as far into life as I have, you want to be able to help also. So, there's that part of me, but no, it's totally different. I mean, this is, it's a heartbreaker is what it is to see that we've got, set up for most revolutions where you have this huge differential between the elite class with the billions and everybody else. Of course, you and I are fine. We've stacked, me longer than you, I'm sure, but nonetheless, and, we're fine. But most aren't.
The real warning here isn't about silver prices. It's about the social tension those prices signal. As Rafi Farber points out here, a surge toward triple-digit silver and 5,000 plus gold historically reflects deep stress inside the monetary system, not prosperity. In 1980, the blow-off felt celebratory because inflation was shocking, but society was still stable, whereas today wealth concentration and debt levels are far higher than in previous cycles. Investors should notice the contrast. When asset protection rises while public confidence falls, markets often enter politically volatile phases. Next, Rafi Farber discusses why rising metal prices don't necessarily make investors feel safer.
And so how do you mitigate that? And what does the transition we talked about look like? We don't know. We don't want to visit that again. But no, it's heartbreaker. I'm not gleeful that, my true net worth has gone up here in the last year and a half substantially, and I did think it would. I wrote about it early, but does that make me a happier person than I was a year and a half ago? Actually, no. I'm more concerned, more empathetic, more compassionate, more concerned. I said concerned twice than ever before, Rafi. That's facts.
That's why I'm excited about the gold and silver price. So we were talking about the 90s, what that nobody was interested in silver in the 1990s. So I guess the first thing I'll ask you is, since silver moved from 20 to 120 and now it seems to be settling at around 80 or 90 or somewhere in there, it's still bouncing around. But, when you pictured this happening so many decades ago, when you started getting interested, is this anything that you had imagined like this, like the world being what it is? And where do you think we're going? Is it just going to keep going higher until the dollar falls, and then what?
Yeah, great question. Well, I'll address the market first. And as far as anticipating, these kind of price levels? The answer is yes.
Sometimes the most important signal isn't the price surge, it's the unease behind it. As Rafi Farber points out here, silver moving from roughly $20 to above $100 in a short cycle represents not just a commodity rally, but a massive shift in purchasing power expectations. When investors become wealthier in nominal terms while feeling more worried about the future, it usually means the underlying currency system is weakening rather than markets strengthening. That tension is exactly what long-term investors watch during late-stage monetary cycles. Next, Rafi Farber talks about why these price levels were actually anticipated decades ago.
When I wrote the first primer on silver, it's called Get the Skinny on Silver Investing. It was a takeoff on the Idiot's Guide collection. Was approached by the publisher, and it was certainly not my best work, but it's kind of a good overview of the silver market. And I said, I saw $100 silver, and that was, like I said, 2005. I also said many times on other interviews that I expected the market to move similar to what it did in 1980, which was basically 90% of the move came in the last 10% of the time. That's not a precise number, but it's to convey the idea that at the last leg of the major trend, it will be a large capital appreciation in a short amount of time. And that's where I think we are now. As far as the top price, this is why I'm so happy you invited me back. I honor your thoughts on it as much as my own. I don't really see the dollar going to zero, but the trend is obviously there. And what happens? And there's several scenarios, but I think the two main scenarios are one that I'm somewhat a proponent of, and that is that there will be a new system implemented or forced upon us. Could be something along the lines of the central bank digital currency before the dollar makes it to absolute zero. On the other hand, I cannot rule out, and I'm not going to speak for you, but want to hear more what you have to say than what I think.
The most explosive part of a bull market almost always arrives when investors think it's already too late. As Rafi Farber points out here, historical commodity cycles show that roughly 80 to 90% of price appreciation often happens in the final stretch of the trend, just as seen in the 1980 precious metals spike. That pattern matters because markets frequently compress decades of monetary pressure into a few volatile years once confidence in policy weakens. Investors watching liquidity, currency strength, and policy shifts know these late-stage surges rarely move slowly. Next, Rafi Farber discusses the possible monetary systems that could emerge before the dollar fully breaks.
They may have miscalculated, and we could get in a situation where things grind down to where the system just does fail. Bank closures, uncertainty in the market, and what do we do at that point? As you pointed out, in my view, accurately, and I thought more like you in my earlier days than I do today. Doesn't make me right or wrong, just older. That we could see a situation where we do go to some type of pseudo, gold standard. I don't think we'll have a real true gold standard or bimetallic standard again, but we'll have some system tied to gold, tied to silver, bartering silver at some level, that type of thing. I can't rule that out. I think the system could get away from the powers that be, is what I'm saying. And if that is the case, then what does that look like? And that's really hard to put any kind of a scenario on.
Yeah, well, I do see it as an inevitability because that's where all fiat system leads. Like, just logically, whenever I go back to it and I think, well, is the dollar going to absolute zero? I'm trying to think of a scenario where it can't happen. And the only scenario I can think of where it doesn't happen is where they freeze everything and then the banks collapse. Because the only thing that keeps the banks alive is the inflationary process.
The uncomfortable reality is that modern banking survives on continuous currency expansion. As Rafi Farber points out here, if inflation stops or liquidity freezes, highly leveraged banking systems face the same domino risk seen during crises like 2008 or the regional bank turmoil of March 2023. This is why policymakers rarely allow deflationary resets. The system depends on expanding credit to keep balance sheets functioning. For investors, the real takeaway isn't ideology, but structural risk. Currencies can be stabilized temporarily, but debt structures eventually force a reset. Next, Rafi Farber unravels why that reset could reshape the entire monetary framework.
Otherwise, they all fail on a domino. So no matter like I don't want to be part of the people that are predicting the end of society from the end of the dollar. I mean, you have people like Keith Weiner that say, well, if that really happens, then all this capital that feeds all the farms that feed all of America and all the Western world. Well, if they can't have the credit flowing through their capital systems, then they all break apart. We can't feed that many people in America and half the population dies. I'm not saying that's going to happen. I don't think that's going to happen. But then at the same time, I don't want to be part of that of those people where people think that I think society is ending. But I just don't see a way that the dollar can survive and the banks can survive. It's going to be one or the other. Either the bank system is going to die, and then you have a financial reset that way, or the money is going to die, and then there will be a financial reset that way. But I always go back to hyper deflation and hyperinflation are really the same thing. It's just that the purchasing power goes back into gold and silver anyway.
Wall Street rarely admits the system survives only as long as credit keeps expanding. As Rafi Farber points out here, the real dilemma isn't apocalyptic collapse, but a structural fork in the road where either the banking system fails or the currency steadily loses purchasing power. History already hints at the answer. Since 1971, the US dollar has lost over 85% of its buying power, while financial markets expanded through debt and liquidity injections. Investors watching credit cycles, no policymakers usually sacrifice currency strength before allowing bank balance sheets to implode. Next, Rafi Farber unravels what a monetary reset might actually look like.
And in terms of a gold standard, what do I see about a gold standard? I don't see any big like UN or let's say United Financial Nations or the financial UN or whatever the equivalent of that would be, a Bretton Woods system or however you want to describe it. I don't see the big honchos getting together and deciding on a new gold standard and then everything's fine. That's not happening. But what I do see as possible is if the dollar really doesn't work, then we have to go back to the most liquid commodity, which is gold and silver. Gold on a deep storage basis and for big capital transactions, and silver on a retail basis. I don't think it's going to be permanent, but I don't see any other way forward. We have to get back to liquid commodity as money, and from there we can build up a new credit system. But the dollar isn't born out of nothing; it's born out of silver, and and then and then it switched to gold. So we have to go back to that. I can't. Can you see a way where that doesn't happen logically?
I don't know if it's logical. I mean, I'll just have to be consistent because, I do a fair amount of interviews and my context is, what Mark Carney said.
Markets often assume monetary systems change through orderly policy meetings, but history shows they usually shift under pressure. As Rafi Farber points out here, the idea of global leaders calmly designing a new gold-backed system resembles the Bretton Woods Conference of 1944. Yet today's debt levels exceed 350% of global GDP, far more fragile than the post-war environment. When currencies lose credibility, markets themselves often choose the replacement through liquidity preference rather than political agreement. For investors, that means commodities and hard assets can regain monetary roles unexpectedly. Next, Rafi Farber discusses how central banks might try to prevent that outcome.
When he was working at the Bank of London, and he said the same speech basically at Jackson, Wyoming, with the Fed meeting, the UN, and another place like the WEF. And basically, he said that we want an unbacked modern money theory, print to infinity, controlled by the central bank, digital currency that's implemented more or less on a global basis. My words, the last part, not his, but the implication was there. So just because that's what they want does not mean that's what's going to happen. And I'm very adamant about that last statement. But nonetheless, the banks still have a great deal of power. unfortunately, in my opinion. But nonetheless, a lot of people will look at this universal basic income that's been a trial balloon now for quite some time, and things get harsher and harsher, AI takeovers, and everything that's going on in this global mess. People want security, and if they're going to be guaranteed quote unquote security, they might just sign up for a digital based track tax system. So I don't rule it out. I'm really truly still exploring different ideas, what the different scenarios are. I don't rule yours out. In fact, I agree with it. I mean, you can't go back into history and find another way. Nonetheless, it doesn't mean the bankers won't try something, quote unquote.
The quiet policy debate today isn't about inflation. It's about control over the financial rails. As Rafi Farber points out here, proposals for central bank digital currencies combined with universal basic income create a system where liquidity can be distributed instantly but also monitored or restricted in real time. Central banks already expanded balance sheets by trillions after the 2020 crisis, proving policymakers will experiment aggressively when stability is threatened. For investors, that raises a deeper question about privacy, capital flows, and the long-term role of decentralized assets. Next, Rafi Farber shows why even powerful institutions may struggle to implement such control.
What do you look forward to? What are the bright spots in the world that you see right now, whether they have to do with gold and silver or not, that you wake up in the morning and you're like, I think the world can be better and I think we're on our way there. Because all bankers have always wanted to take over the world. That's nothing new. The fact that they're bankers now, it's whatever the power center is. It happens to be bankers now because we figured out that inflation really controls the masses. That's not something that humanity always understood. That's only in the last, maybe 1,000, 2,000 years. But human society is like, let's say 10,000 years old or something like that. You could say it's even older. It depends how you want to count it. But King Nimrod wanted to build a tower to heaven. No, that didn't work. And then if we skip all the way to the 20th century, Hitler wanted to take over the planet. It worked for a while, and then it didn't. So Mark Carney wants to take over the world through a central bank digital currency. Well, that's not going to work either because that's not how humanity is structured.
Every generation believes centralized power has finally mastered the system, until history reminds them otherwise. As Rafi Farber points out here, financial authorities may believe monetary tools like inflation and digital currencies can permanently stabilize control, but large-scale systems repeatedly fail once they exceed public trust. Empires from Rome to the 20th century collapsed not from a single event, but from gradual erosion of credibility and economic balance. For investors, that perspective matters because markets eventually reflect human behavior, not just policy decisions or balance sheets. Next, Rafi Farber discusses where real optimism might still exist in this cycle.
We're not structured to suffer a central power that rules over all of us. It's impossible. So what are the bright spots that you're seeing, and what keeps you going?
Well, I'll start my mission statement to teach and empower people to understand the benefits of an honest monetary system. I mean, that's why I get up every day. And I'd say the bright spots are several. One is that at the end of the great inflations, we see that people themselves come up with ideas to mitigate the problem. One you could say is a cryptocurrency. I'm not favorable to Bitcoin. I was favorable to the concept of Bitcoin in the initial white paper, but it's basically morphed off to basically the exact opposite of the original white paper. But that is a way out, you might say, as far as a competitor to the status quo. The one I think is the most logical and has the most traction is what my friends are doing in the Citizens for Sound Money, and the amount of states in the union that have reenacted legislation to use gold and silver in all transactions as long as both parties agree. And I think that could be, let's say, for a thought experiment, Rafi.
The quiet shift happening beneath global finance might not start with central banks. It may start with local adoption. As Rafi Farber points out here, monetary history repeatedly shows that during periods of high inflation or currency distrust, alternative systems begin at the edges before gaining wider traction. Several US states have already passed legislation recognizing gold and silver as legal transactional assets, signaling a subtle pushback against centralized monetary control. For investors, that hints at a broader trend where parallel systems can coexist with traditional finance during transitions. Next, Rafi Farber discusses how these alternatives could actually function in daily transactions.
That there is a digital currency and you take it or leave it. Well, in those 14 states that have gold and silver availability, you don't have to take it. You could just start using your gold and silver. And there's lots of ways to use it now that weren't available a decade ago. For example, these gold backs, that's 1/1000th of a of a gram, or excuse me, that's 1/1000th of an ounce, which at 5,000 the ounce, that's a $5 bill in gold right there. So it is pretty low denominations. You had the problem with gold previously where you couldn't divide it to those kind of units. You can now. Silver is the same thing, and then there's digital gold and silver, which you can trust or not trust, but it's a way to transact, electronically, as long as you have trust in the system. And there are systems set up with digital transfers that are accounted for. You can go visit the vaults and that type of thing. So I think it's a states' rights issue in the United States. I'm not saying globally, that's pushing back on the federal system. And of course, the Federal Reserve, as we all know, isn't federal or doesn't have any real reserves.
The real financial innovation here isn't technology, it's optionality in how value moves. As Rafi Farber points out here, new tools like fractional gold notes and digital metal accounts are solving the historic problem of divisibility that limited precious metals as everyday currency. If gold were priced near $5,000 per ounce, a 1,000th ounce unit effectively becomes a small transaction instrument, something traditional coinage never handled well. Investors should recognize this quietly expands liquidity options outside the banking system during monetary stress. Next, Rafi Farber talks about how communities historically adapt when currencies begin losing trust.
Nonetheless, I think that's an opportunity there. And then if things go into, let's say, what you call the the end game, which I love that term, people are intuitive. They can adapt quickly. So, if you look back into smaller communities like Argentina, Venezuela, Turkey, I mean, there's many in the Silver Manifesto that were fairly recent. And what do? Well, the people gather together in kind of a flea market atmosphere where they barter and they also trade in the US dollar also, I'll have to admit that, in the greenback, but gold and silver. And I was a bit naive thinking, I'm thinking as an American, gold coins, silver coins, constitutional silver. And that's true. But really, most of the transactions are, gold jewelry, gold chains, coins as well. But, a gold bracelet is still gold. A silver ring is still silver. So I think that there's enough of opportunities to mitigate the damage of control that the bankers want to maintain. And that's pretty evident in my view.
Let me just riff off of what you're saying.
When currencies weaken, everyday markets often adapt faster than policymakers expect. As Rafi Farber points out here, countries like Argentina, Venezuela, and Turkey have already shown how informal trade networks emerge when official financial systems lose credibility. In those environments, people rarely wait for perfect policy solutions. They simply trade whatever holds value, from jewelry to foreign currency to raw commodities. Investors watching global monetary instability should notice this pattern. Trust migrates toward tangible assets long before central banks officially acknowledge the shift. Next, Rafi Farber shows how that shift in purchasing power becomes visible in real life.
So the move from, let's say, $2,000 gold to where we are now, 5,200, and the move from silver to about 25, let's say, to whatever, 90 now. I understood, this is one of the things that I understood intellectually but I never really experienced it. That I knew that if I just kept stacking, and that includes gold and silver mining stocks to some degree, and that kind of stuff. I knew that I would gain purchasing power faster than the dollar would lose it. I understood that, but now that I'm in a war zone and the country is basically shut down, and I knew that people were struggling before, and I kept telling them, take whatever you have and get some gold and silver with whatever you have left over, and they're like, I don't have anything left over. What do I do? And I'm like, if you have nothing left over, I can't really help you.
The hardest truth in monetary crises is that protection works best before the crisis arrives. As Rafi Farber points out here, the rise from roughly $2,000 gold toward $5,000 dramatically increases purchasing power for those already holding hard assets, but it offers little relief to households living paycheck to paycheck. That gap is what economists rarely discuss openly. Asset inflation benefits prepared investors, while wage earners often fall further behind during currency transitions. For long-term investors, the lesson isn't speculation, but timing and risk preparation.